Buckle up. May's stock market takes investors on a wild ride. May 2024 proved to be a nail-biter for investors, a month of unexpected twists and sharp turns in the stock market. Tech stocks, previously considered invincible, took a tumble, dragging down major indices. Meanwhile, the energy sector surprised analysts with a surge driven by rising oil prices. Mid-month, a confluence of events sent shockwaves through Wall Street, leaving investors reeling and scrambling for answers. Adding to the uncertainty, inflation data came in hotter than expected, fueling fears that the Federal Reserve would continue its aggressive interest rate hikes. This news sent shivers down the spines of investors who braced themselves for the potential impact on corporate profits and economic growth. As the month drew to a close, the stock market remained on edge, a reflection of the numerous challenges and uncertainties facing the global economy. The only certainty seemed to be that volatility would remain a constant companion in the months to come. Tech giants, once considered invincible, felt the heat in May. Apple, Microsoft, and Amazon all saw significant drops in their stock prices, sending shockwaves through the tech-heavy Nasdaq. Rising interest rates, soaring inflation, and concerns about a potential recession weighed heavily on investor sentiment. Growth stocks, particularly those in the tech sector, fell out of favor as investors sought refuge in more defensive sectors like consumer staples and utilities. The tech sector's stumble served as a stark reminder that even the mightiest of companies are not immune to the forces of the market. As the dust settled on May's tumultuous trading, one thing was clear. The tech landscape was changing and investors would need to adapt to this new reality. While the tech sector faltered, the energy sector emerged as a beacon of strength. Oil prices, driven by geopolitical tensions and supply chain disruptions, surged to multi-year highs. This surge translated into significant gains for energy companies, which saw their stock prices soar. ExxonMobil, Chevron, and ConocoPhillips were among the biggest beneficiaries, rewarding investors who had stuck with the sector despite its recent struggles. The war in Ukraine and the resulting sanctions on Russia, a major oil and gas producer, had upended global energy markets, highlighting the world's continued reliance on fossil fuels. While the transition to a greener economy remained a long-term goal, the reality was that the world would continue to depend on oil and gas for the foreseeable future. For investors, the energy sector's resurgence presented both opportunities and challenges. Mid-May, the Bureau of Labor Statistics dropped a bombshell. Inflation was not cooling down as quickly as anticipated. The Consumer Price Index, or CPI, a key measure of inflation, came in hotter than expected, sending shockwaves through the market. Investors, who had been hoping for signs that inflation was peaking, were caught off guard, triggering a wave of selling that sent stocks tumbling. The unexpected inflation data had significant implications for the Federal Reserve's monetary policy. The Fed, tasked with keeping inflation in check, had already raised interest rates several times in recent months. However, the hotter-than-expected CPI print suggested that more aggressive action might be needed to tame inflation. The unexpected inflation data served as a stark reminder that the economic recovery was far from straightforward. May wasn't just about macroeconomic trends. It was also a month of bold moves by some of the biggest players in the market. Warren Buffett's Berkshire Hathaway made headlines by increasing its stake in Occidental Petroleum, a bet on the continued strength of the energy sector. Meanwhile, Elon Musk's Tesla continued to make news, albeit not always for the right reasons. Tesla's stock price took another hit after Musk announced plans to buy a majority stake in Twitter. These moves by some of the biggest names in the investing world highlighted the fact that even seasoned professionals have different views on the market. Success in the market requires careful research, a sound investment strategy, and a willingness to adapt to changing conditions. As May drew to a close, investors were left to ponder the implications of the month's wild ride. The global economy was facing numerous challenges, including rising inflation, geopolitical tensions, and the lingering effects of the pandemic. The tech sector, which had driven market gains for years, was facing a reality check. Rising interest rates and concerns about a potential recession were weighing on growth prospects, forcing investors to reassess their expectations. The energy sector, on the other hand, was benefiting from the current environment, but its long-term outlook remained uncertain. For investors, the key takeaway was the importance of staying informed, remaining disciplined, and focusing on the long term. The future may be uncertain, but by staying the course and making informed choices, investors can navigate the challenges and capitalize on the opportunities that lie ahead.